Hi guys, this is Dan from the Investment ABC, and in this video I'm going to analyze the current situation of Nio. I made a video before about this Chinese EV startup when Nio was around $6. I will put a link for you at the end of this video. I owned some Nio but sold mine at around $10 because the hype was just too high at that time and the risk too much to justify the price. Still, I wanted to get in back into the stock once the price would decline, and I did. Unfortunately, I did not have the time to make new videos for a long time to warn you guys of the high valuation at that time, but I hope to be able to produce 2 to 3 good videos each month from now on. My average cost is €2.42 and I own 2,259 shares of Nio. At the moment, I'm down 45% on my Nio investment. But like I said in my previous video, I know the risk of investing in this company. The chances of bankruptcy are high, and with every day Nio doesn't get fresh funding, the odds rise. So what am I doing with my investment and why? I will plainly hold, or like the Bitcoin fans would say, hodl my shares. For me, Nio is a very high risk, high reward trade. It would easily be a 10-bagger in 3 years' time if they survive the drought and secure new fundings or they go bankrupt. Time will tell, but in my opinion, their product is very good, and from the looks and performance, it is even superior than Tesla cars, and until now, even cheaper. We have to see how much Tesla can reduce their costs for their cars once the Shanghai Gigafactory ramps up mass production. For those of you who understand German, I will link some performance videos about Nio where you can see how surprised the Germans are about the quality and good performance of the Nio cars. The problem Nio faces currently is the reputation Chinese companies and products have until now in the world. Most of us in the Western world still have the opinion that China is producing mainly $1 junk which they sell into the Western countries, and that they are copycats instead of innovators. In my opinion, we already passed that stage a long time ago. China is already leading in many areas and not copying anymore. It will be more and more obvious to the West that the Chinese surpassed us, first economically and second technologically. At that time, Chinese products will be seen with other eyes. This is also one reason why I think that Nio will be bailed out either by the Chinese government or one of their major investors like Tencent. You have to understand that Nio, similarly to Tesla, doesn't want to be only a car producer, it wants to be a technology company. The EV industry is totally different to the current car industry. It will be more about data and lifestyle than just cars. EV, together with 5G and AI, will be the next big industrial revolution in the next coming years. A company like Tencent or the government can take advantage of the data collected from Nio cars and use it for increasing their profits or control. Since Nio's AI technology is one of the most advanced in the industry, chances are high that they will get some sort of funding or deal to secure future data. I also doubt that the government wants the data of their citizens being collected by an American company like Tesla, especially in the environment of a trade war. China has the largest EV market in the world currently, and that growth is just in the infant stage. I am 100% sure that we will see massive growth over the next decade in the EV space. The growth will be driven most likely by better and more efficient batteries with longer range. The current lithium cobalt batteries still cost too much, have a relative short range, and are not that environmental friendly than most EV fans think. But we will overcome these problems and invent better and better batteries similar to the computers or mobiles we have built over the years. Do you remember the first computer or mobiles and now compare it to the current ones? Here is an article about a British engineer who might be on the verge of breakthrough to develop aluminum batteries with a potential range of 1,500 miles and costs of only $5,000. If we see a mass production of these kind of batteries, we will see a massive decline in the cost of EV cars and rapid growth. At that point, Nio's battery swap strategy will pay off, because swapping these batteries will be way more cost efficient than now, and Nio will have already the infrastructure which they can also monetize by then. Overall, Nio's strategy is more focused on the long term and the overall rapid growth of the EV industry. This focus on the long term comes hand in hand with an immense cash burn in the beginning. But if they achieve to build a loyal customer base with the help of their Nio houses and spaces, their growing community app, and their EV infrastructure, similar to how Apple did in their earlier years, they might turn into a major world player in the EV industry with a market cap of $100 billion plus in the future. Their strategy is a double-edged sword, but because they are relying on that immense growth in the EV industry. The problem is that China and also the world is slowing down currently, and on top of that, the government subsidies were reduced significantly in China. Right now, Nio is struggling with the high cash burn and the sales decline in their ES8 due to the recall and replacement of the battery packs of 5,000 cars. After the introduction of their new ES6, new sales of the ES8 declined. This is not surprising because both cars are very similar, but the ES6 is cheaper and has a longer range than the ES8. In my opinion, it would have been smarter to start with the ES6 and build a sedan as the second car, but this is just my own opinion. If we look at Nio's second quarter earnings, we can see at first glance that total deliveries fell from 3,989 in the first quarter to 3,553 in the second quarter. What is more troublesome is that deliveries for the ES8 model came almost to a halt in the month of July and August. It is no surprise to me because the ES6 model is cheaper, has a longer range, and a 5-seater is enough for most Chinese families. We have to see how deliveries of the ES6 develop in the near future. By looking at the next table, we can see that total vehicle sales were down 7.9% and total revenues 7.5%. In my opinion, the decline is a combination of people waiting for the ES6, the cutting of government subsidies for the EV cars, and an overall economic slowdown in the Chinese auto industry and economy. If you look at other Chinese EV car manufacturers like BYD, you realize that Nio is not alone struggling. BYD is the biggest EV car manufacturer and is expecting 2019 full-year net profits to decline by 43%. We can also see from the table that the vehicle margin is minus 24.1% and the gross margin minus 33.4%. This looks very bad at first glance, but if we exclude the battery recall, vehicle margins would improve to minus 4% and gross margins to minus 10.9%. What is also noteworthy is that research and development costs were up by 20.6% from the first quarter to $189.4 million. This increase was due to rigorous testing of the ES6 before the mass production. After finishing these tests, Nio could decrease their R&D costs to reduce spending and gain stability. If Nio is able to get fresh funding in some form without diluting their shares and ramp up steadily ES6 deliveries while reducing cost and overhead, they might be able to survive and actually prosper in the future. What they achieved already is to draw attention from the media, investors and other car makers. A couple of days ago, the CFO resigned due to personal reasons, but it might also be a condition from an investor for fresh funding. Nio will almost likely report their third quarter earnings this November. They already announced strong delivery numbers for the third quarter, up 35.1%, with 4,799 cars delivered. 4,196 cars were ES6 and only 603 ES8s. The company also began in October delivering ES6 and ES8 vehicles with an 84 kilowatt battery pack that extends their range to 316 miles and 276 miles respectively. The start of the ES6 deliveries looks promising. We can only hope that this model doesn't have any problems like the exploding batteries of the ES8. Bad PR could be devastating for Nio at this stage. The current tough economical environment and the reduction in government subsidies will lead to a consolidation in the EV market. Many smaller EV startups will vanish and only the strong survive. After that cleansing, the remaining EV manufacturers will be more profitable when the Chinese economy turns around. In my opinion, the smartest thing to do is to keep increasing the sales of the ES6 while improving the quality and customer satisfaction to be able to sell at a positive margin. At the same time, the company needs to get leaner and cut costs while maintaining their long-term vision to attract fresh capital. After reaching this first goal, they should launch a sedan and start building their own manufacturing plant to increase the margins further. Early 2020, Nio and GAC are starting in a joint venture the production of the Haikan, a smaller and cheaper SUV version. The cost of the car will be around 200,000 yuan, but that number is not confirmed yet. They want to start deliveries in mid-2020. Nio is owning 45% of this joint venture and GAC also 45%. We can hope that the Haikan is not cannibalizing ES6 deliveries in a similar way the ES6 did with ES8 sales. If the price of 200,000 yuan is correct, the car is very competitive priced. Overall, investors will wait and see if Nio is getting fresh capital or not, and if they do, if the shares are getting diluted or not. I will also wait and add to my positions once funding is secured. Also, it is good to wait for the 13F filings of the third quarter. If big players like Tencent, Bailey Gifford or BlackRock are still holding their shares or even increase their positions, it will be a good sign. What I also like about Nio is the fact that the CEO Bin Li is owning a lot of the shares himself. He will do whatever it takes to secure Nio's success or lose a lot of money and reputation. Time will tell if Nio survives and how they will do in the future. I try to keep you updated if I sell out on my positions or something fundamentally changes. If you like this video, hit the like button, subscribe and share. Please also write down in the comments which stocks I should analyze next. Also, this is no financial advice. I'm no financial advisor, so please do your own due diligence. Bye and hope to see you in the next one, guys.